We had our little mini pullback, which we were looking for from 273. Yesterday we took out at 273 and a quarter. Double top from last week, went up about another dollar and change. Drifted higher in the after hours, and this morning more follow through. So if we zoom out a little bit, let's go to a 4-hour chart and see what that looks like. It's kind of getting busy. Okay, so just looking on the 4-hour chart here, going back to December 4th, the big down day, we started here. Okay, so I'm just looking. So the way that we got to 280 last time was on November 28th, we ripped to the upside to around 274-ish. Then we held above 273. That's the area where we just failed from and had that $5 pullback. We retook that. So really the question becomes now as we're moving into towards this kind of where the big down started from in December. It's about a buck and change above where we are right now. Does that act as a short-term top? So it was really hard. I mean, we came off like $6 there, and then I guess we gapped lower. It's pretty nasty. Came back up, did a retest to 270, and then just got crushed. Then it did a retest into the 268s, and then that was the big down. The collapse as the Fed got people really angry. So if we look at, last week, we broke out from 267-ish. We went up about $6. Then we failed. Really, I guess the question is over the next 3 to 5 trading days, on the breakout above 273, is that enough to get us to the high 270s, or are we going to fail into here? I don't have the answer to that, although I'd say if we got there today, I would definitely short. As always, it's a question of how quickly you get to areas of potential support or resistance. The quicker you get there, the most likely you are is to have an initial reaction and failure. If we can spend, what's today, Wednesday, we spend a couple of days consolidating here above 274, then next week start to break to the upside, there's a better chance we would just zip right through that. So that's where we are in the SPYs. IWM continues to show the relative strength. We're right there. We're almost at the December 4th high. So small caps still showing good relative strength, no signs of relenting. We zoom out, and this is pretty big right here. Just looking at it going all the way back to November, December. So I'm kind of curious at this 154 if we fail. The way I would look at it is if we got up to above 154 and we spent some time there, you notice that there was a level we weren't getting through over the course of a few hours. I would actually nibble on the short side there. And confirmation would be maybe move back down below 53 and a hold. Spend time here, maybe try to pop back up, failed to here. But spending time here after topping out above 54, and then a break to the downside, you could get something pretty good. So that's IWM. All right, fresh stuff. ETVI. So ETVI was like the most telegraphed earnings miss warning that I've seen in a long time. We know that it sold off in front of the news. I mean, people knew about this clearly. certainly we saw it when it took out this, a couple of days ago, when it took out this 44, came off really hard, came back, retested it, and then coming into the announcement, they crushed it into 40. Selling the puts and calls would have worked. We talked about those in yesterday's meeting, the 44s and the 36s. So, well, for now. So when something like this happens, where something sells off this hard in anticipation, quite often what you have is the news gets released and it gets bought. It looks like maybe they dropped it out to the low before it got bought. We'll zoom in, see if any volume was done down there. But basically, the way I look at it is I want to trade this on the long side now that it's had the hard down move. Coming into this is kind of a buy the news situation, meaning the market is priced in the bad news. It's anticipated the bad news. People position themselves short in front of the bad news. They got out of the stock in front of the bad news. Now people buy. And that just avoids that question being asked later. So yeah, it really did go down there to 40 after they announced the bad news. Let's see what the volume was down there. And yeah, people bought. I mean, this is a few 100,000 shares being bought down here. And then it has the pot. It has the $2 pop. 100,000 shares were bought here into 41, and then above 42, the volume died down. But yeah, we can zoom in. We can see. I guess most of the volume was done here before 40, in front of 41 and 42, between 41 and 42. At least 1 million shares. So what do I have on the sheet? So I have 44 as S2. I did put R2, R3, 45 and a quarter. Let's zoom out for a second. Okay, yeah. So I figured it was a good case scenario by the news that they'd rip it into this area here, present some issues, and then kind of, I put it as best case, working its way back up to 45. Question is, if it is best case, would it do that in the first 30 minutes, or does it, pop up here to 44, then pull back a buck and change or something, and then grind up to that 45 later? Those would be the two most likely scenarios. So it's actually right below 43 right now. For support, I have 42 as our first. So if it's going to be really strong, you probably see some quick profit taking. Doesn't really even challenge this 42 much. And then after that drop out, maybe starts to hold above where it was being bought a few days ago, above 42.80. And then you try, you play this into here, and then you kind of see, does it consolidate again? And that. Right on the open, the other possibilities, it just does this spike, it fails at 44. People play it on the short side to here, and then you kind of see, does it hold up? Or does it kind of move sideways here and break to the downside and you get your 42? So that's kind of how I'm looking at it for the open. And a reminder, a conversation I was having actually with Jeff earlier is most stocks, I know I say this a lot, but it's worth repeating, most stocks will find their way, will trade a lot often between S1 and R1, but huge percentage of the time between S2 and R1, R2. They just don't break through those levels. That's why I catch it when something rips through all of our support or rips through all of our resistance right on the open. Those become much more likely trend plays for the day. But what is 20, 25% of stocks really trends for the day. Most stocks will go between the levels that we highlight. Next stock is Teva, TVA. So let's zoom out on the 30-minute. So this one got a pop into the low 20s when people found out one of Buffett's proteges was buying it for Berkshire Hathaway. Their time frame's a little bit different than ours. So, it's great that it popped up on that, but it might be a couple of years before it, I don't want to go that far out. It might be another year before it finds a way to get above this 24. The December sell-off did take it down to $15. And so in these scenarios, when stocks are putting in these longer term bottoms, and it did bottom out down here close to 10, initially bounced up to 22, put in the higher low, put in the higher high. So this could do this for another year easily. So let's zoom in. And by the way, the EPS warning was pretty nasty, but it already come off from 24 to 15 in December, so it makes sense to me that it would make a higher low here, like somewhere between 16 and 17, and then do this and come back to this downtrend, maybe to like 18. I'm talking about over the next few days. All right, let's zoom in. So far, I was actually looking at it in the pre-market here, debated whether or not I should start nibbling, and I was like, they'll probably flush it to 16.5 on the open or lower. So we'll see. It's got sold here at 17. Would maybe have to start buying into strength if it makes the higher low here and then starts to hold above 17.10, or move to like 17.50 or something like that. I did put S1750 on the sheet as R2. So that's that. HLT, I put it on here because the numbers seem ridiculously good to me. I'm a little suspicious why it's not gapping up more. But then again, it doesn't trade that much in the pre-market. It's only traded 20,000 shares. The other thing about it is it was accumulated in front of the numbers. So people should be motivated to push it higher. I'm zooming out here just to see. Okay, so in 2017, it did go straight up from 64 to 78. So it's coming into this. This is an important area. When you have the kind of this shallow, longer-term downtrend that's pretty much right there as well. So this isn't just a play for today. If this actually closes above 78 today, we could be looking at a move back up to 80 to 82 in the next few days. So let's figure this out. It hasn't done any volume. We don't have any support probably until here. So this is a scenario where the numbers are so good that if it does a quick drop out in the open, I'll blindly buy it, assuming other people will come in here. They could be waiting for the conference call. That could be what it is. But you catch it down here. Unlike yesterday, what was that CHGG, which you bought on the quick $2 dropout and it pounds $2? This is one where I'd be really looking, if I caught it here in the open and it quickly got back up to 78, I'd be thinking, I want to swing this to like the low 80s. And then FCX is for a very liquid name for everybody. It got an upgrade, so that's the Morgan Stanley upgrade was the reason why I put it on. It's also, if you just look at it, it's just in this downtrend. I put in its low. This is when the market made the higher low in the beginning of January. We made a higher low here. I just thought it was interesting in terms of the technical setup of the Morgan upgrade. Maybe that's enough for it to come in and test this resistance from the last couple months. But maybe this becomes a multi-day mover. It actually really goes. So every once in a while, I can move a couple of dollars. So I remember it went crazy. When was this? This was the end of 2017. Went straight up to I think we were like looking at the short side here, and then it like went up here. Then it came back up here. It was a great short. I think we were definitely remember shorting it in the 19s. If you go back on the game plan calendar from back then, you probably find it as a short into 19. Anyway, this could end up being, if this gets above, what you really want to see is like in the first couple hours it take out 12.5, and if it does that, then maybe you walk into something. Twilio is one of the stronger stocks in the market. I noticed that it dropped out a little bit and it got rebid already, so that kind of bodes well. for it. It's going to be, oh wow, it really rebid. It came back all the way back up. So let's zoom in. It's got to hold this 114.5, 115 area, I would say, if it's going to, if this uptrend is going to continue. It's extended. So you can kind of see when it gets when it kind of finds a top area that it can have some pretty nasty down moves. But it was consolidating above 100 for a while, broke out. I didn't even really look at the numbers. I just saw that people were disappointed initially. We came off to support from a few days ago. It wouldn't surprise me if it failed right here and came off all the way back to 112. But if it is going to take out 120 today, it's gonna hold this here, and you're going to see it rip up to the 119, and then it probably will hold higher. Then it will take out 120. So, but it's a little bit similar to the was the one yesterday EA, where EA like that 106.80 where it failed 2 days ago, and then they ripped to that on the open, and then it came off $70. So any type of failure here in the 118s, people will probably sell. I guess that's a pretty big range to work with. So for more experienced traders, as always, be patient and good luck.